Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning. Friday, August 26, 2022, Jackson Hole Day. We'll get that fun and games going here in less than an hour, 40 minutes from now, out of beautiful Jackson Hole, Wyoming. Jay Powell is going to tell us what the deal is. So as of right now, equity futures were red, now green. PCE data came in. We'll get to that in a second. But futures are green now. Yields are a little bit lower. Copper up almost 2% on the commodity space. We've been talking about this a little while. We told you we re-entered Freeport on the long side. That's looking to have had a real nice jump yesterday. I think 6%. It's going to be up again today. The copper situation, I think, is a little tighter than the market is expecting. China is trying to do a massive infrastructure initiative. Been greeted with a kind of a yawn so far, but who knows? Maybe I don't know. Maybe that catches people's attention. I kind of like the action here when you've got expectations so low and activity so low that a base metal like that is starting to act well, because you got to keep in mind it's going to discount a recovery well in advance of a recovery, and I'm certainly not saying it's off to the races at this point. I still think that feels like too early, but nevertheless, acting well. Base metals in general acting really well. Alcoa we own, Nucor we own, Freeport we own. We own other stuff that comes out of the ground like Mosaic. The fertilizers continue to act well. Recall part of that thesis is based on other smelters, other plants, other manufacturing facilities not able to withstand productivity levels that could be attained in the U.S. with our cheaper natural gas, our cheaper energy sources. So advantage United States. And then if we look at what's the other? And then energy continues to do well. We got, I think nat gas is up another 1.5% today. WTI is up a little bit. So PCE deflator came in at 6.3 versus 6.4 expected. You probably saw this already. 6.8 last month. Core, which is what the Fed really cares about, 4.6 versus 4.7 and 4.8 last month. So all came in a little bit cooler than expectations. The next set of data looks interesting to me. Personal income for July up 0.2% versus 0.6% expected, and spending up 10 bips versus 50 bips expected. That is interesting. That's you want those metrics are both headed in the right direction if that trend continues, because you kind of want that M2 recirculation of money in the economy to slow down, because that only accelerates inflation. So we get spending down. That's a pretty good miss. That 40 bip delta there, I think, is compelling. So maybe not too surprising. The yields fell on that data when that came out. Equity futures spiked up a little bit. And then also back to the real world in terms of corporate earnings. Dell seeing slowdowns in consumer and commercial. Last quarter, Dell estimated annual PC unit shipments at 330 million. For 2022, new estimate, 290 million. That's only a 1 quarter difference. Inventories are up a smooth 39% year over year. Not compelling. And they're looking for component prices to drop. So be careful on the semis. I still think it's too early to broadly embrace semis. It seems like the silicon carbide stuff is working. So specifically on semi, Wolf, to the extent Air Test and Axcelis, but that's more specific phenomenon, I think, around silicon carbide with applications to electric vehicles, to EVs. The other stuff is tricky. I mean, we own Qualcomm. It's like the cheapest one out there. Nice dividend. I'm not totally smart enough to catch the exact bottom in semis, but we're going to try real hard. But I still think it's too early. Workday. So great results. This is an example of a company that will allow their customers to do more in terms of productivity with less capital, whether that's employees or costs or what have you. The messaging that their customers receive from them is that exact scenario. It's pretty close to mission critical software. That's the kind of thing they can work here. Not collaboration stuff. More save me money today or protect me because I have to. Cybersecurity. That's the mission critical stuff. Benioff used the word measured to describe spending from the enterprise. Remember that? So this isn't it's not like a 1 quarter event. This is a trend. So be cognizant of that. And Jackson Hole, maybe we do see a pop today. It seems like this market wants to go higher near term. And then maybe we do start to struggle going into September. We took down a lot of our hedges earlier this week. We still think that underinvestment is huge out there. I do know that some shorts have re-engaged and are looking for that big whoosh down. Not getting it yet. We're actually going up a little bit every day, which has got to be just driving them absolutely crazy. So all that being said, I do still think that the market in general is overpriced still. That's my opinion. We'll see what happens. That doesn't mean certain specific names can't work. We've talked about this. Not a stock market, a market of stocks. Have an awesome weekend, and we will talk to you on Monday.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The Ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, Grinnellcapital.com.